Welcome back to the channel. Today we're going to be looking into the recent earnings report of Blink stock and looking into whether or not the stock is a buy at its current price. If you are completely new here, my name's Ben. I make videos on investing in the stock market and overall finance videos. Like I say time and time again, I am not a financial advisor, so don't take anything I say seriously.
Nope.
If you want a free share worth up to £100, then go down in the description and make an account with Trading212. Thereby you'll potentially get a share worth up to £100 as well as myself. Before I move on, I just want to mention that I'm currently adapting to the type of content that you guys want to see. Feel free to comment down below on your opinion on whether or not you prefer these types of videos or my personal finance type of videos. Anyways, let's get into the video. Before we dive into the earnings report, which should now be released being just gone 4:30 here in the UK, to what I found out, it was not coming out at 4:30 and then it was coming out around 9 o'clock at night. So you might be wondering why half this video, the lighting looks a bit different. Well, probably because half of it was filmed at night and half of it was filmed during the day. So cheers Ben mate, you absolute idiot. I just want to quickly introduce what Blink is, as it's the first time I've mentioned it on this channel. Blink are a leading owner, operator and provider of electric vehicle charging equipment and networked EV charging services, based in Miami Beach, Florida. The company was founded 12 years ago in 2009 by this guy. Blink Charging owns and operates an electric vehicle charging network and offers related services. It also operates its cloud service called Blink Network, which you can access through their mobile app. It is a cloud-based software that operates, maintains and tracks all the Blink EV charging stations and the associated charging data, EV charging equipment and EV related services. Blink has thousands of EV chargers deployed all across the United States in numerous locations, including airports, car dealers, football stadiums, supermarkets, anywhere you can think of. Their strategic relationships and often long-term agreements with hundreds of property partners, including well-recognised companies, as well as local businesses. They offer their property partners a flexible range of business models for the EV charging equipment and services. On the official Blink website, you can go and fill out a form to ask whether or not you want to have a charging station in your location. Within this, Blink have put out a statement that they reckon that global EV purchases are forecasted to rise to 20 million by 2025, and that they are committed to expanding their EV charging network in locations that are most requested. Alright, and we're back. I don't know how well you can tell, but it is now dark and it's coming up to about 10:30. Anyways, the report is out and I've had a quick look through it. Some articles have already been released and said that it's had some mixed opinions, but I think they've come out with some pretty big numbers here. So straight off the back, the fourth quarter revenue compared to the fourth quarter of 2019, Blink saw a 250% increase. And coming out with numbers like this, it shows how well they've managed to do throughout the pandemic. And for the whole year of 2020, revenue grew by 121%. It's almost as if Rona wasn't even a thing. By looking at these numbers, they've managed to do incredibly well considering the situation they've been in. So revenue for Q4 2020, like I said, being up 250% year over year. Analysts predicted they'd have a revenue of 1.8 million for the quarter. They reported revenues of 2.5 million for the quarter. So they've done incredibly well, beating analyst predictions there. And like I said, revenues was up 250% quarter over quarter for the years. And so that Q4 2019, they reported revenues of 0.7 million in comparison to 2.5 million of this quarter. Their incredible increase in revenue majority came from their product sales, going from 0.9 million in 2019 to a staggering 4.4 million in 2020. Network fees also doubled, went from $500,000 to $1 million in the last year. However, they did see a decrease in revenue from their charging services, going from 1.4 million in revenue for 2019 in comparison to 2020 being a revenue of 0.8 million. However, the company have come out and said that they reckon this is primarily due to the pandemic. Where this report has mixed opinions is when it comes to their net loss. The net loss reported by the company was 9.7 million for 2019 in comparison to the net loss of 2020 being at $17.8 million. However, so be it, this necessarily isn't a bad thing, as increased expenses can be related to the anticipated growth of the business, of which in my opinion is showing the right signs, as it's showing the company is growing going forward from its increase in revenues, and although it's having an increase in net loss, the business is still focusing primarily on growth if it wants to fulfill its target of being the largest supplier of EV charging stations. Blink have also said that they have increased their cash reserves from a total of 7.1 million of December of 2019 to 22.3 million of December last year. Also, just looking through this is another statement that they've released, stating that they believe that Blink is a long-time leader in the EV industry and who have been expanding methodically and strategically, expanding our geographic footprint and building our brand recognition to capture opportunities as the world transitions to EV. And with the way that they're heading, this could probably be true. Just think how long Tesla primarily just focused on its growth, and that they only just turned over a profit within the last year, and the likes of Amazon going 10 years before making a profit. Correct me if I'm wrong on that one. The argument has always been there of whether or not they're going to be outcompete with the likes of Tesla providing their own charging stations, and so be it companies like NIO if they ever come to America with their battery swapping stations, and also their rivals ChargePoint. However, looking at these numbers, it shows that they are showing significant growth within the business. And the growing EV industry as a whole, the company has loads of potential going forward in the future. And in terms of them growing as a business,
blink and you'll miss it.
Anyways, as for the stock, you would have got a return on investment of around 3,000% if you bought around March last year and sold it around January this year, of where the stock saw its highs of around $60 a share. Currently, the stock is trading in the $30 price mark, being down at 4% after hours at the time of this recording. It opened up for the day being around 10% down. However, it's recovered completely and it ended up just slightly positive for the day. However, it's currently following the overall market right now, as a lot of the stocks that were completely down for the day ended up actually finishing positive, with example of the likes of Tesla and NIO. And the stock is about half from its all-time high if you included the after hours prices. If we had a look at some of the forecasts for the stock and went to CNN, where they've given a low target of $38 a share, even what they've predicted as a low is above its current price. Currently, the low would give a return on investment of about 9.5%. The median is at a really healthy price, around $60 a share, of which it was its all-time high. That'd give you a return on investment of 73% of what it is currently, and then a high of $67 a share. And with the after hour prices, it'd probably give you a return on investment of 100% or double your money. All these forecasts and targets are all within the next 12 months, so we'll just have to wait and see how the market behaves over this next 12 months and hopefully get us out of the times that we're currently suffering.
LOL!
As a lot of you out there that follow the channel that invest in EV companies, you will know that you are either suffering right now or you're loving it because you're buying all these dips. All I can say for the meantime of what I'm doing, and I'm not a financial advisor so do not copy me, is that I'm just adding to my positions on red days and try to make the most of these prices when they are a lot lower. If you truly believed in the business going forward, as fundamentals all around the business have not changed whatsoever, then you would truly stick by it and hold your position. The last thing you want to be doing is getting out of your position and losing a decent amount of money, as you could regret it in years to come if the stock was to completely surge. There have been a lot of articles out there stating that Blink stock is overvalued for what it actually is, which in some cases could be fairly true. However, a lot of the time, and especially for Blink, they're incorporating the potential growth ahead in the years to come, and that is already included within the price. Especially across the whole EV market right now, a lot of stocks are a really good buying point to get in if you haven't already. I currently haven't got anything in Blink at the moment, and I have just been using it for swing trading, but I am extremely tempted and I am going to be watching it in the near future. If you've currently got a position within the stock, or just in general your opinion on the stock, let me know down in the comments. So to conclude this video, I think Blink are a really good company going forward, and they've got a lot of potential to grow, especially coming out of the pandemic, hopefully next year. But yes, it's a stock I'm hoping to add to one of my long-term positions, and I want to try and do it sooner rather than later, as especially now I think it's a really attractive price to get in. If you haven't already, give this video a juicy like, and even one better, if you sub to the channel, I'd be greatly appreciated. Anyways guys, thanks again for watching, and I'll see you lot on the next one. In a bit.